Hi everyone, how's it going?
Hi,
Excited to be here. Today we're very fortunate in that we have some of the leading minds in the space to discuss Bitcoin's evolving market structure and the growing influence of institutions on the Bitcoin market. So first and foremost, who are we? Well, the lovely gentlemen to my right, as I said, are some of the best minds in the space. So first and foremost, we have a professional, dubious speculator and someone who's been increasing their dominance within the world of Bitcoin data, Ben Cowen of Into the Cryptoverse. We then have some true Dutch royalty and my favorite source of vitamin B, T, and C, the rational root of Bitcoin strategy platform. And last but very much not least, the man to my right here is André Dragosch, a man who's a little bit wiser than most institutional investors from Bitwise.
Thank you.
So we'll get straight into it. I think everyone's well aware that we've seen a growing institutional influence on the Bitcoin price action. And as we can see from this chart, there's been over 2.29 million BTC accumulated and now held within the ETFs and corporate treasuries, which equates to about 11.5% of the entire circulating supply of Bitcoin. And this has obviously had a pretty dramatic effect on the underlying market structure. We can see here Bitcoin's volatility has been diminishing, and as we're all probably very much aware, the price action has been very sideways, choppy, let's be honest, quite boring this entire cycle. And we're now at a pretty pivotal point, I feel, because we can see that volatility is as cyclical as price action, and we're currently at some of the lowest levels of recorded volatility we've ever seen. So what we can do is take it over to André, who can tell us how we're seeing a growing demand and how institutions are now actually outweighing the new BTC supply.
Yes, thank you so much. So, I think the big story this year and especially last year as well is institutional demand. And it's not only a buzzword, right? Many people think about institutional adoption as some kind of buzzword narrative, but you can really see it in the data. And one of the reasons why we at Bitwise think like the 4-year cycle is somewhat dead is this chart. So what we've seen since essentially 2024 is that the supply deficit induced by the halving has become smaller and smaller over time, while institutional demand by Bitcoin treasury companies and ETFs has essentially increased by a multiple of that, right? We're close to 1 million Bitcoins purchased by institutional investors this year, including ETFs and including Bitcoin treasury companies. And it's a 7x the size of the supply deficit induced by the halving. So that's why we think that institutional demand, so demand rather than supply, will drive the market going forward. And what is driving institutional demand itself? It's the macro cycle. And so we don't think the macro cycle will end where we will peak in 2025. To the contrary, like liquidity growth actually points to an extension of the macro cycle and thus like the institutional demand cycle well into 2026.
I think you bring up a good point there, and it's the potential of a lengthening cycle. Now, everyone's used to Bitcoin's traditional 4-year cycle, and this one has been a little bit different. Now we're in a lengthening cycle, and I think Root has some great insights on this, being a cycle analyst expert, if I do say so myself.
Yeah, so Bitcoin came forth out of the 2008 financial crisis, and since then we have been moving in this 4-year cycle, which is kind of illustrated by this chart. But indeed, if we look at the broader business cycle, before 2008, we actually had an 8-year business cycle. And since then, we've moved in 4-year business cycles. So Bitcoin is not only tied to the halvings, but also to the broader business cycle. Now, the early halvings probably had like a bigger effect on blow-off tops. But the past halving is only probably like a marginal effect on Bitcoin. But to give an example there, like if we would not have had the last halving, we would actually reach the 21 million coins in circulation in the next 2.5 years. And because of the halving effect, that gets extended 100 years. So that would mean we're currently at almost 20 million Bitcoin in circulation. That would mean an additional million Bitcoin still to be sold likely, because the miners usually sell over the next 2.5 years. So there's still an impact there, but it's only marginal if you compare it to the current institutional flows and the ETF flows.
And again, I think you bring up a good point there of Bitcoin kind of growing, especially with this institutional interest. It's more of just a macroeconomic asset. And as we can see from this chart from Ben here, I think we can see some signs of those tides maybe shifting a little bit as well.
Yeah, I think you could argue that Bitcoin is very much tied to monetary policy. This entire cycle has been more so plagued with high interest rates and quantitative tightening for much longer than in prior cycles. And so because of that, it's actually led Bitcoin to really outperform most everything else in the crypto space, just because in times of uncertainty, you buy what you're most familiar with, what you're most confident in long term. And in crypto, that's clearly by far going to be Bitcoin. So Bitcoin has done very well over the last few years under high rates and quantitative tightening. And Jerome Powell, the chair of the Federal Reserve, has recently announced that they will be ending quantitative tightening in December. So we will probably transition into sort of the next phase of the cycle for Bitcoin. And the general idea with monetary policy in general is they're never going to stop printing money. So fiat currencies are going asymptotically to zero. Therefore, Bitcoin offers a way out of that.
100%. And I think we can also see this, as you mentioned, on liquidity there, by looking at the liquidity versus Bitcoin chart, specifically the global M2 chart. So, André, I know this is a little bit of a controversial chart, but can you please share some insights on this?
I'm happy that you bring this up because it's probably the most hated chart right now. So people have been following this chart very closely. It shows a global money supply lagged by 3 months in Bitcoin. And people have criticized this chart because Bitcoin has not been following global money supply on a tick-by-tick basis, right? And I agree. There's more like a long-term relationship between Bitcoin and global money supply, what statisticians call co-integration. And in my view, this long-term relationship still holds. And we did statistical analysis on this. And in fact, these relationships, they tend to mean revert, meaning the farther Bitcoin diverges from the trajectory of global money supply, the higher the probability that it's going to mean revert, that will reverse back to this trajectory at some point. But yeah, it's not, you can't use it on a tick-by-tick basis. And what many people also say or criticize about global money supply is it's actually a derivative of the dollar, because all these like foreign money supplies, like the Chinese money supply or European money supplies, you have to convert them by the exchange rate. So it's somewhat of a derivative of the dollar. But like dollar depreciation or currency depreciation is almost synonymous with global money supply or money supply growth based on what is called the purchasing power parity theorem. So I don't buy this argument that this is essentially just the dollar and that you should disregard this. It's the same. It's a different side of the same coin, essentially.
Yeah, and
No
I
pun
think
intended.
I think leading on from that, another reason that I feel like a lot of investors are maybe a little bit uninterested at the minute. We can see retail sentiment is very low. And that might be due to the fact that we've seen obviously a very high correlation between Bitcoin and other assets, specifically US equity indexes, as we can see here. And recently, as we've said, we've been underperforming. But Root, do you think that this underperformance is going to continue? And do you think that there's any benefits that Bitcoin has acted as such a almost high beta play of US tech stocks?
Yeah, Bitcoin is really seen as a risk asset, which I think is just the phase that we're in. The ETF approval in 2024 was a bit of the beginning of that. The maturity of Bitcoin as an institutional grade asset. We have now BlackRock behind Bitcoin. There's strategic Bitcoin reserves. And so we really entered like a new era for Bitcoin, where I think if you look at the previous cycles, it was more retail. Now we got to a market cap now that the impact of retail capital isn't as influential. Most don't have like an extra 100K on their bank account to acquire Bitcoin, and so So that is a contribution to this diminishing returns as well. And the last year, we've really seen that we've traded very similar to the gains that we see in tech stocks, like in the NASDAQ or the S&P 500. And I think that's actually the maturity of Bitcoin. There isn't as much retail hype at the moment. And so it's with this kind of passive flows from institutions that come into play, Bitcoin is trading as an institutional grade asset, which I only think demonstrates its success. Now, we all would have wanted like a parabolic move this cycle, and that hasn't happened. As I said, like retail capital doesn't have as much impact. And institutions are only getting into the market in a more gradual manner. And so I think it's very likely that Bitcoin will continue lengthening this cycle as it is tied to the business cycle. And to get back to the liquidity chart that Andre that from Bitwise just in the previous slide, there is now this divergence with liquidity and Bitcoin. I also think that you have to take into account like the Treasury General account and so the Federal Reserve balance sheet and actually all balance sheet from the central banks because those also lock up capital temporarily, and so you get these kind of divergences in those charts.
I guess one of the other benefits that maybe doesn't feel like a benefit right now in the fact that we're having muted upside moves is it's also limiting the drawdown percentages that we're seeing. So there is some benefits to seeing this institutional passive flow into the market, as we said before, moving from speculation to stability. But a lot of market participants, especially within the cryptocurrency space, are maybe feeling a little worse off than usual due to the fact that Bitcoin has really taken the main spotlight. We're not seeing as much interest in alternative crypto assets. And I think, Ben, do you have any kind of insights on whether you think institutions are going to be more interested in these, or do you think that Bitcoin's going to reign supreme for even longer than it already has?
Yeah, I mean, I think Bitcoin will continue to reign supreme over the macro scale. Bitcoin dominance has been in a macro uptrend for years. What's really telling about the Bitcoin dominance chart is that the low, sort of the macro low, is actually set in late 2017, early 2018. And you could argue that despite all the money printing we had in 2020 and 2021, despite interest rates effectively at zero, and also despite the fact that the stablecoin market cap took up a much larger market cap in 2023, 2024 than it ever did back then, it's telling that Bitcoin dominance actually put in a higher low in 2022, despite all those theoretical headwinds to it. So to me, I think Bitcoin dominance has already gone from 38% to 66% this cycle. And my guess is the tailwinds will remain there. You have institutions more interested. I think monetary policy continues to favor Bitcoin as well. And I also think that this chart really goes to show that Bitcoin is more so a longer term investment, whereas other things in the space are more speculative, more short-term type moves. So I do think Bitcoin will continue to reclaim more and more dominance as the years go on.
And to add to that, as well as the fact that we're seeing obviously a huge institutional influence on Bitcoin, and this market structure is obviously evolving because of that, we're also at an interesting point where the behavior of existing participants, is starting to evolve alongside that. So, Root, can you talk us through how the supply and demand economics of Bitcoin is changing, not just from the new institutional participants, but those long-term holders that were already within Bitcoin?
Yeah, so we have actually a bit of like compounding sell pressure from all previous cycles. So it's not only like if you think of Bitcoin moving in this diminishing returns. Currently, actually, the like 1.8x upside to Bitcoin is actually reasonable if you look at that diminishing returns. Now, diminishing returns happens obviously due to an increase in market cap. So retail capital, as I said before, doesn't have as much impact at these prices than it did in previous cycles. But also, you get compounded sell pressure from all those HODLers that are sitting on enormous gains. So we this cycle again, we don't have only long-term holders selling from the previous cycle, but also from the cycle before that and the cycle before that. And so that is and those gains are usually like an order of magnitude higher. And so we have people sitting on thousands 1000x gains from, for example, the 2013 cycle. And for them, the 100K price level is like a very reasonable price to change their lifestyle a bit. And so I think we entered a new era for Bitcoin. And so I really like the analogy that recently was a bit popular on Twitter, the IPO moment for Bitcoin. I think that's a very good analogy for what's happening. Bitcoin is very successful because it reached that 100K, because everyone believes that it also will reach 1 million and 10 million, and there's no reason it wouldn't. And so I think that 100K level we have kind of been waiting for 2 cycles. And so especially for people sitting, the HODLers sitting on those enormous gains like 1000x and 100x are scaling out a bit at these price levels. And so what is interesting is that 100K price level has been a very psychological level for all the HODLers. And they're not selling because they lost conviction. It's just because their bet was right. You know, Bitcoin is winning because we actually have measurable institutional adoption. I pulled out actually the 13F filing data from this morning, which the deadline is in 2 days, so I don't have a full chart on that. But you could actually see that for Q3, again, we see an increase in institutional adoption. For example, JP Morgan now entered the top 20 of institutional ETF holdings. And so those are all signs that Bitcoin is winning. And so to me, it's actually a successful Bitcoin success that now allows some of those hodlers to sell some of their Bitcoin to scale a bit out and to enter this new era.
And I think it's also a big part of the fact that there's now the sufficient liquidity to actually have these OGs start offloading their Bitcoin, whereas traditionally we required this big retail inflow, this big retail FOMO, and new wave of capital that this cycle we haven't actually seen. If we look at the social interest within Bitcoin, it's lower than ever, essentially. We're at bear market lows. It just seems like the market is comparatively dead to where we should be, considering we're above 100,000. The fundamentals look strong. Institutionals are buying like crazy. Yet retail still doesn't seem to be too interested. So Ben, do you have any insights on this?
Yeah, I mean, it really has been a different cycle than what we've seen in the past. If you look at, what happened in the end of 2017 and the end of 2021, there was a ton of social interest in crypto. And then it also actually corresponded to major drops in Bitcoin dominance back then. But the reason, this cycle, we haven't really seen that. And I think it could be an artifact of institutions, honestly. I mean, that's a big part of it. But you also have, again, monetary policy that more so supports the blue chips of each industry, and in this case, it's Bitcoin. And I continue to sort of see the current cycle as a 2019 version, just more of a longer version of what we saw in 2019, where it was mostly a Bitcoin-only bull market, where Bitcoin would go up, and it would sort of lift the rest of the market with it, but everything else would just kind of lag behind. And that's what we saw for basically all of 2019. And during that time, Bitcoin also would pull liquidity from the rest of the market. And that's why we talk a lot about sort of valuing everything in terms of Satoshis, because then you kind of start to see how the overall market behaves. And we've just continued to see liquidity go from altcoins, head on over to Bitcoin. And so retail hasn't really shown back up, right? There's a lot of people that keep on saying like retail is going to arrive, but that has not happened this cycle. And that's just something to sort of keep in mind and say, is this like 2017? Is it like 2021? In terms of social interest and in terms of monetary policy, it's so much closer to what we saw in 2019.
Yeah, and Ben, so in this chart also it illustrates very well how we haven't had that parabolic move. So the retail hasn't been here, and I think so if we have not had a parabolic move up, there's also no real basis to have an 80% bear market drop from here. So that's another reason to assume that the cycle will just continue to lengthen.
100%. And there's also the argument to be made if Bitcoin even needs retail capital flowing into the market. What we can see by looking at institutionally driven assets like gold over the past few years have gone absolutely exponential with very little retail involvement. And what we can see is Bitcoin, even though we are seeing more and more institutional interest, really we're still quite a baby in the comparative markets compared to traditional assets like gold. So André, could you give some insights on if we are to see a bit just more of an institutional rotation rather than new retail influx and FOMO, would that be sufficient to drive Bitcoin to new highs?
Yeah, absolutely. I think you hit the nail on the head. I mean, obviously, this bar chart is just a hypothetical example. It just goes to show that you only need a tiny amount of capital rotating from gold to Bitcoin. And the reason is that gold is so much bigger, right? We're talking about an asset that is probably 10, 15 times bigger than Bitcoin, right? Gold's probably between 25 and 30 trillion US dollars, while Bitcoin's around 2 trillion. And it just goes to show that Bitcoin's adoption in terms of like the amount of global wealth, which is above, I think, 1,000 trillion, right? I've just reposted that chart by grain of salt. Bitcoin's market cap relative to like global wealth is just 0.2%. It's a drop in the ocean. So from an institutional adoption point of view, I think we're still early. And I mean, over the long term, it's quite likely that money will flow to Bitcoin from especially gold and other stores of value, because Bitcoin is a technologically superior store of value. Has better transferability, better divisibility, and so on, right? It's definitely technologically superior. It has better, like, it's absolutely limited, and so on. But yeah, I think that's over the long term. But in the short term, I think you could already see a significant rotation if we saw a risk on rally again, right? A renewed return in risk appetite because of global growth, because of monetary policy easing. And the way I think about Bitcoin versus gold, about that relative performance, is essentially risk on or risk off, right? So usually in a kind of global growth environment where global growth is accelerating, you tend to see an outperformance of Bitcoin versus gold. In an environment where global growth is slowing, you tend to see the opposite. And I do think we'll see that renewed acceleration again. We're already seeing it at some leading indicators.
Yeah, and one thing I would like to add is, in spite of all of these changes, the evolving market conditions and structure that we're seeing, is Bitcoin already in this cycle has had 5 separate instances where we've had close to a parabolic piece of price action where we've moved over 65% in under 100 days. So even though things are changing, Bitcoin still has the ability to do the extraordinary and is still such a small asset. We can have these parabolic moves, these exponential periods of price action, and we could see, just looking at the comparative size of the market, realistically the capital rotation required to do that is much lower than what many people may be anticipating. So just to close out, I'm going to ask you what you guys think this cycle is going to look like going forward. Do you think we've already topped? Do you think we're going to have a big blow-off parabolic move to end the year, or are lengthening cycles the new base case? So André?
So based on this institutional adoption story and the macro cycle, monetary policy easing, I think the cycle will extend well into 2026. I don't think we've seen the cycle top yet. We haven't seen the blow-off top, right? Most valuation indicators actually imply that Bitcoin's below fair value, so it's even undervalued. So I think we'll definitely see a cycle that extends well into 2026. And in terms of price targets, I think the fair value for Bitcoin right now, based on several valuation indicators, probably right now as we speak, around 150 to 200K already.
Amazing. And Root, what are your thoughts?
Yeah, so everything is about probabilities, of course, but I do think that the indicators favor a lengthening cycle, and so I think we will probably not have like a huge influx of retail. I think we're past kind of that phase. I think we'll just continue to have gradual institution adoption, and there will probably be some sell pressure from that HODLer cohort. So I think we'll move up in a more gradual manner, consolidate as we have been doing. I think there's a big likelihood that we're close to a bottom of this consolidation, and we're getting ready to move up for the next leg. Now, I don't expect that to be very high because as I said, like there's the HODLer cohort is willing to change some of their lifestyle, and so I think we'll have some sell pressure from that cohort in particular during an up move. So I don't expect like really high price targets, but I think we can continue for a lot longer, especially when the macro or the business cycle is in favor for Bitcoin as well.
Great. And Ben, final thoughts?
I guess I'll take the other side. I'm more of like a, if it's not broke, don't fix it type of person. And, I've been in crypto a long time, and I still do believe in the 4-year cycle. So my guess is that the cycle top for this cycle is probably before the end of the year. But as the Rational Review said earlier, when you don't have euphoria, when you don't have euphoric parabolic rallies, if you don't have a crazy end to the year, and it's more so just lackluster, it also means you have diminishing losses as well. So I sort of see some macro headwinds for the first half of 2026, maybe a lack of desire to cut interest rates too much more. But by the end of 2026, I think we'll start picking back up again, and we'll just keep going on, and it'll set us up for the next bull market.
Amazing. Well, I'll side with you just so we have 2 votes on either side, but I think that's pretty much everything. I hope you all enjoyed this discussion. I'd like to say on Zetten bedankt. I've been your host, Matt Crosby, and thank you guys for doing this. I'm hopeful we can do it again next year.
Thank you.